Join the Ungovernables. No filters, no apologies. This season, we're cracking open Uniswap governance. Welcome to a new episode of the Ungovernable podcast.
Welcome to a new episode of the Ungovernable podcast. Today, we're joined by two visionary builders within the DeFi space, Dex and Daniel. They're building Semantic Layer, and they have some exciting projects they're building on top of Uni v4 that we're hoping to dive in today. We are Joe and Austin, the premier from Alpha Growth, the premier DeFi operations and growth firm. Dex and Daniel, welcome. Great to have you both here. Just want to open it up and ask what else should the listeners know about you?
Hey, GM folks, thanks for having us. It's great to be on this podcast. My name is Dex. I'm one of the co-founders and also product designer at Semantic Layer.
GM,
Nice.
guys. Really honored to be here. Especially I want to share our roadmap. I'll share our journey to the crypto space. I'm Daniel. I'm mostly leading the engineering in Semantic Layer. Besides both me and Dex, shit posts a lot on Twitter. So yeah.
We really appreciate you guys joining. And just for fun here, since these guys are Anon, I had no idea that I knew them. And I actually got to meet them in Dubai last year. And then when I found out that they were going to be coming on the podcast, I was so stoked. So thank you guys again. Excited for this conversation. Dex, let's start with you, dude. Your name is literally Dex, and your background started with some decentralized, centralized exchange, arbitrage, all the way into data layer solutions with your new project. How did that journey happen? Walk us through.
So as I told the story many times, the first time I got into crypto, that was in 2014. I was just a high school student at the time. So I went to this high school in Michigan, and as an international student. So many of you probably know those schools, they charge international students like $40,000-$50,000 a year tuition. But I got everything covered, like dorm, electricity, right? So at the time it was 2014, everybody was talking about mining Bitcoin, and I started mining an altcoin called Feathercoin in my high school dorm because I got free electricity. So that's how everything started. Later on I graduated from high school and went to university in Michigan, and later moved to Canada for a master's degree, and that was 2020. So 2020, DeFi just took off. A lot of those market makers that were very active on central exchange, they want a piece of pie. They want to see how they can make money with those DeFi craze. So that's when I was asked to join a market maker and help them to build their centralized, decentralized exchange arbitrage in 2020. And 2020, that was a pretty early time. And at the time, there was no flash bots. So all the searches of the MEV bots just directly PVP in the mempool. So many of you probably also remember at the peak of the DeFi summer, it costs $100 just to send a ERC20 on Ethereum mainnet. Those are pretty wild times.
It's kind of nuts. I remember the back in 2017, CryptoKitty is just kind of the hairball ingestion of being able to mint a CryptoKitty. It became quite difficult to actually use mainnet. I'm kind of curious, Dex, from what you learned, do you think this had an impact on what you're building for Semantic Layer?
It is, but just at the time, I didn't realize it. So at the time, at the time, 2020, I was doing centralized, decentralized exchange arbitrage, and later, Daniel and I and another co-founder, we kind of realized, seems like DeFi program is pretty popular. Everybody wants to build some DeFi yield farm, and smart contract is pretty complex, and you got those Korean hackers trying to steal money from people's DeFi protocol. So there was a huge demand for smart contract audit. So we actually started doing smart contract audit instead of MEV, on-chain arbitrage. Only later on, like in 2023, right, during the deep bear market, like when we're doing a lot of those like research, just like talking with those DApp developers, that's when we're starting to realize, okay, there's something else that we want to build. We want to probably move away from smart contract audit and more towards like solving some of the fundamental issues of those different DeFi dapps. That is like they're leaking value to arbitragers, they're leaking value to validators, they're leaking value to researchers.
Sometimes I think the unsexy stuff it's hard to justify for a lot of people to spend their time and resources solving those problems. But so thank you for stepping up to the plate and solving some of those things that are necessary to make everything more efficient, but not so sexy as the crypto kitties of the world. And I'm happy to, we'll definitely have time today to dive into the solution itself and what you guys are building and how it's, especially on the Uniswap V4 side of things, it's going to be very exciting to hear your takes on that. Daniel, your turn. You started your journey. Well, this obviously you weren't born working for Tesla Autopilot, but you have a background building solutions for Tesla self-driving cars, and now we're here. Now we're talking about crypto on a podcast. So walk us through that journey.
GM. Yeah, actually, I'm not anal. I just had a terrible haircut lately, so don't want to be on TV with that terrible haircut. Like right after you do the haircut, there are like 3 to 4 days of like, I would say like withdrawal period of time, like similar to like staking withdrawal. Like you basically lock yourself in the room and don't want to go out. Yeah, this is my current situation. Yeah, like but next time definitely want to show everyone like more on the live stream. But yeah, like for me, back to my journey of crypto actually similar to Dex study way back to 2013 when I was still in high school. It's my friend that bought me a magazine. There was just articles inside the magazine, and there's one article about like future of finance, like Bitcoin stuff. I seriously got fascinated by the idea of Bitcoin. I still remember that afternoon, I was actually shocked. So I went back home and talked to my mom, like, can I buy some Bitcoin? And actually my mom helped me to buy the first Bitcoin, not through any crypto exchange. There was like a lot of shitty exchange at that time, but I was actually just using the Taobao, like the Chinese version of Amazon, like to purchase my first Bitcoin. It's like, think about it, it's like real RFQ experience, right? Like you just request and ask for a quote. And the owner actually taught me a lot of things about how to download the wallet, what crypto is, and which coin should buy. And at that point, there's a meme like Bitcoin is gold, Litecoin is silver, right. What other coins? Like Ripple coin is like copper or something. So when Litecoin, I remember like last year, Litecoin said they turned themselves into a meme coin. I'm like, wait, are they in the beginning already a meme coin? Like they always been a meme coin in my head, like the silver coin. So actually the first time I didn't buy the Bitcoin, I bought the Ripple because that guy told me Ripple has a huge room to grow. So I bought some Ripple coin and later Bitcoin. And in 2017 to 2018, I was working in Tesla Autopilot team. Actually, I was working for service engineering, but specialized in autopilot system, mostly helping people to diagnose, for helping engineers diagnose what's happening when autopilot has some issues. So if you are driving old version of like the version back to 2018, like Tesla Model S and Model X, so there might be some piece of code running on the backend written by me, but hopefully you're never using it because it only be used when bad things happen. So yeah, hopefully it's never going to trigger. But basically analysis what's going on with autopilot. At that time, autopilot system is still very young. And the funny part, a lot of engineers on the team, they all like super big fan of like crypto. We will actually study how to do the arbitrage, study like how it works back to that time. So my first education in finance, in like order book stuff, in central exchange was back to that time. One of my colleagues is still actually doing arbitraging market making business nowadays. That was the time when I first actually studied deeper about like Ethereum, about like smart contracts, and later I went back to UBC, continued my study in electrical and computer engineering, specialized in cybersecurity. At that time, people, when we talk about security in crypto at that time, like people still talk about POS, POW, like even back to 2019. But when I just know Dex, we were actually talking about Uniswap. We were talking about like MakerDAO. And yeah, we see the future of the finance right now shifting from like building, this public chain towards building meaningful dApps where people can actually use. And similar to like, just like what Uniswap is doing, like permissionless decentralized exchange or permissionless leverage or lending protocols. Like we just realized there's a huge market here. And also during the 2017 ICO bubble, we saw a lot of coins had like severe security risks only on ERC20. So that's how we know there's a huge market of smart contract. So we quickly started our last team called Verilog Solutions. And as Dex mentioned, during the last couple of years, we audited a lot of protocols. Some of them are very famous, like trending back to that time, like Steppen, BendDAO, the NFT lending protocol. And some of them are like safe, Gnosis, like some layer twos. And by the beginning of last year, like we were literally like in Flashbots events, like talking about MEV solutions, and we just came up idea. Let's just build a negotiation layer between like the app and existing MEV infra. So it makes MEV be more balanced. So like realistically speaking, MEV cannot be eliminated from the ecosystem because EVM, the current design of EVM still have latency, like 12 seconds per block things. If this existed, like basically there's no way to eliminate MEV. But how we can make it 90% rebated back to users and fairly distributed is more important. So that's the entire philosophy and the story behind the Semantic Layer and Verilog and and us.
Yeah, you guys have quite the background going from arbitrage to audits, and then now tapping into really connecting the dots between like dApps and the infrastructure. I guess, how did you guys see a need for what you're building in the space? Like, how did you know it exists? I know you have like your background in this space, but what was kind of the kicker to let you guys know, like, hey, we should be building this?
It's really just from talking with developers. That's like what's unique being a smart contract auditor is that those developers, they're paying us to do a job, right? So we're not their investors, we're not their token holders. So they don't have to like sugarcoat anything with us. They can just directly tell us what is the problem, what are some of the challenges they're facing. And just by talking with all those developers, the fact is just it is very hard for DeFi protocols to make money. Majority of the business model is just you charge a percentage on the trading volume, or you charge a percentage of the yield, and then that's it. And your competitor can very easily just undercut you by charging a couple fewer bips. So this is a challenge that those DeFi developers they're complaining about. And another thing they complain about is that meanwhile, life is hard for them. But then they look at all those MVV bots, those searchers and validators, right? They're making huge amount of money by using their dApps. You see all those MVV opportunities originates from different decentralized exchanges, lending protocols. But none of those values actually go back to those protocols. And then we will look at the entire MEV supply chain. Right? If you think about how a transaction is getting included on chain, right? You go to some front end, you click some button like swap. Okay, sign some transaction in MetaMask or whatever wallet, and then this transaction gets sent to a RPC, gets sent to a block builder, then gets put into a block. This front end, those dApps, they're actually on the very upstream of this entire supply chain. So theoretically, if you control the upstream, like you should be able to capture the majority of the value, right? But it's just that the reality is that they're not capturing the majority of the value. And the technical reason is because, well, although the user, they initiate the transaction in the front end, but those dapps, they don't actually control those order flow. Once it gets sent to the block builder, right, it's just like eat it into the void. It's just eat it into the mempool. So this is the technical reason of why those dapps, they cannot capture those value. So, but we also know the technical solution for that. That is to use meta transaction, to use intent. So we know the problem. We know the developers, they really want to capture those revenues, and we have the technical solution. We know like roughly how to build this, and then we just got started.
I can't stop thinking about how much alpha is hiding in the smart contract auditing business. That's such a good point you brought up, where there's no sugarcoating, right? They're paying you. They tell you exactly what they're dealing with, what's wrong, and what they're struggling with, and that's inefficiency, and inefficiency leads to profit. So good for you guys. That's really impressive. I want to double click on the actual mechanism of how the MEV returns to users. So I think you mentioned 80-90%. What does that actually look like for a user that's interfacing with Semantic Layer?
Yeah, so Semantic is it integrates with different dapps. So actually, dapp developers, they can decide what they're going to do with those recaptured MEV. So if the dapps, they recapture MEV, they can use it to directly to refund the users, or they can use it to build a protocol treasury, such that maybe they can start streaming those yield back to the governance token holders. So governance token is not just a meme coin. Yeah.
Or even, governance token buybacks, right?
Yeah, exactly.
Very cool.
Yeah.
Super.
So I want to ask Daniel and Dex, like, what makes UniV4 a game changer, and why are you guys excited to build on top of it? I know you guys have a few products in the pipeline that are going to be on top of V4. Would love to hear an intro, but most importantly, would love to hear why you guys think UniV4 is going to be a game changer.
Yeah. So I think so first, if you look at how Uniswap gained a lot of traction, like not just V4, but like all the way back to Uniswap V1, right? So at the time when Uniswap V1 was released, there were also other decentralized exchanges. They're like Ether Delta, they're like KyberSwap, and I use those a lot. But I think the reason why Uniswap took off is because it enabled like permissionless listing of assets versus on Ether Delta or KyberSwap. Although they're like on-chain exchanges, you still have to contact their team to get listed there. But with Uniswap, is that anybody can just create a pool, so enable long tail assets trading. So going back to V4, so continue on that. I think what V4 is great is that it is very flexible. It allows developers to add arbitrary functionality before after swap, or before after the user adding a liquidity. Meanwhile, the entire process is still like permissionless. I don't need Uniswap Foundation or Uniswap Labs permission to build a hook. I can just build this hook on Uniswap V4 and publish it myself. And it is totally up to the users to decide which hook to use. So I think like this permissionless nature, this is what's great about Uniswap V4. And another aspect is that with V4, people can build a lot of different mechanisms. Some were building like dynamic swap fees that depend on the market trading volume. So if the trading volume is high, then it has dynamically adjusted LP fees. Some are actually building LVR recapture mechanism, like Solera Labs. And all those different hooks, they can be built on top of Uniswap instead of launching their own decentralized exchange. And I think that's what's great. Like we have too many AMMs out there. We don't need another AMM. Yeah.
Yeah, it's great to see the ethos kind of passed on from UniV1 to UniV4, right? Permissionless in the way that they are distributing assets and enabling people to trade. And now it's almost getting to the point where it's like enabling developers to build on top of the ecosystem. and opening that up. I guess I'm kind of curious, do you guys mind give us like a TLDR on a couple of projects that you guys are building on UniV4?
Yeah. So we have participated in the UniV4 hackathon twice, and we won twice. So the first time we built something called DGen option. So DGen option is actually a callback to previously in DeFi summer we got Uniswap doing liquidity mining, where you provide liquidity, you can earn some of their own tokens. And we thought, okay, this is a good way to incentivize liquidity. Can we incentivize trading volume in the same way? Can we incentivize people to trade some meme coins? So it all started from this. We want to build a platform, a tool that helps meme coin deployers to incentivize people to trade their meme coin. But we also want to add a twist, because with liquidity mining, if you launch a liquidity pool, you are giving out your own token, the same token as the liquidity mining rewards. So this incentivizes people to just farm and dump. And we want to twist that. We want to change that. So that's why, like with DGen option, if you have a meme coin, you can set up a DGen option pool where when people are trading your meme coin, they can earn that option instead of the actual coin. And this option has a strike price. It also has an expiry price. And the expiry price, so whenever the spot price dips below the expiry price, the options will expire worthless. But if the spot price rises above the strike price, then you can exercise those options and you can make some profit. So this creates a very interesting like on-chain PvP dynamic.
Just
ahead.
A quick point on that. For pretty similar mechanisms in traditional finance, part of the options were part of the reason why GameStop went so berserk back in the day. But correct me if I'm wrong, but to exercise those options, that actually does a pretty substantial amount of volume, right? You wouldn't just sell the option at once you have if it's in the money past the strike price and it's at the expiry date, you have to buy the token itself at that lower price, of course, but that still gives a ton more volume versus just a derivative that would be trading. Is that correct?
Yes. Yeah, exactly.
Beautiful.
So the initial option pool is also funded by a token deployer. So, and also whenever people are exercising the option, they were actually buying the option, right? Although at a cheaper price, but they're still buying the option, which means they're paying the token deployer. So the token deployer can make additional revenue. So maybe the token deployer, they don't have to developers sell the coins, but instead, make revenue through those kind of option pool. So yeah, it's just a way to better align the interest between the developer, the token trader, and also the LP. Like developers, they get a more respectful way to make money, right? Instead of selling it disrespectfully, and also the traders, they get incentivized to actually trade the coin. And for the LPs, well, if you're incentivized trading volume, that means more fees that goes to the LPs. So it's all about like interest alignment for DGen option.
That's so clever.
And the second product we're building, second hook we have built is called Silicon Valley.fun. So I mean, one of the revolving theme I kind of realized is that all of our products we build is always a callback of something in the past, right? So for Silicon Valley.fun, this is actually a callback of previously in DeFi summer. There are some index tokens that are very popular: DeFi Pulse Index, Metaverse Index. Those index products, they offer users a good diversified exposure to a specific sector, because at the time, it costs $100 to do an on-chain swap. And if you want to get exposure to a basket of DeFi tokens, you cannot just realistically do that on-chain because each swap is costing $100. So those index products, they're great, but they also come with one problem, is that somebody, an actual person or entity, organization is managing this index. So they decide what tokens to be included in this token. So they have to be very careful, because if they add new tokens too quickly, people might accuse them, oh, you added a token because you have a bag in that token. But if they move too slowly, then the index just like fall out of sync with the overall market, right? If there are some token that's very popular that should be included in index, but that they have to move very slow, then people will just not to hold this index. So we want to change that. The reason the way we are changing it is that we're bringing AI agent. We're letting an AI agent to act as the manager, let AI agent to decide what token to include in this index, such that people wouldn't accuse the AI agent that, oh, you have a bag in this. That's the reason why you add.
Yeah, but who programmed the AI? Hold on a second. Not so fast.
We programmed the AI, but we're going to publish the AI agent's prompt, and the AI agent will be running in a TE. So for the full transparency, and also all of those conversations with AI agents, they will actually be published on chain. And we think there might actually be some pretty good entertainment value in publishing those AI agents on chain. So how it works is that each of those AI agents, which we call AI quant, they will issue their own token, and you can add liquidity for this for their own token. And once we add liquidity for this own token, then this token has a value, and then the AI agent is able to spend this token to buy some other tokens, right? And if you are a liquidity provider, then you can start prompting this AI agent and tell the AI agent, okay, you should buy that token because of those reasons. You should buy this token because of those reasons. But of course, the AI agent can reject. They can say, okay, they're not convinced, or if they're convinced, they're going to start acquiring those other tokens.
Are we going to implement some sort of voter escrow model where if I'm the largest liquidity provider, then the AI agent is going to listen to me more than if someone were to just deposit $1 into the liquidity pool?
So the way we're implementing is actually you will get points for your deposit liquidity. And the amount of points you receive, you earn, is proportional to the amount of liquidity and duration of liquidity you have deposited. So this is similar to liquidity money. And every time we talk with the AI agent, each word is going to cost some points. So if you deposit a lot more liquidity, you deposit for longer, you have more chances to talk with this AI agent.
So is the AI agent like hard to convince? Is it like you need to present or propose something? Or if I'm like, the biggest holder, like I just say, hey, you're going to exchange this coin for that coin in the index.
Actually, you will need some skill to convince the AI agent. So it's not like whoever has the deepest wallet can just easily convince the AI agent to buy this or buy that, because
you'll need to riz the AI.
Yes. You only have
exactly.
only have more chances to talk to AI agent, but like the AI agent will analyze your input, like based on some on-chain metrics, or based on your reasoning, and also based on your historical performance in your wallet. So to make a judgment. So this is something that we did like very unique. So it's not about like who has the richest guy will always be able to control the portfolio. It's similar to how actually like secondary market fund works, right? Even if you are the largest LP, you just have more influence on the portfolio manager. But in the end, it's still the portfolio manager making the decisions because it's his own interest. So yeah, and also we have set up rules. We have certain rules being set up in our smart contract level. So the AI agent cannot like ape in some coins 100% of in total portfolio. No, like you have to follow some hard-coded like fundamental rules of investment. But yeah.
So I feel like this is one of those things that people are just going to try to break, right?
That's the point. Absolutely.
Yeah, you set it up. It's a honeypot. Like, can you talk about like some of the preventive mechanisms? I'm sure you can't just like lay it all out, because then you're just going to show your cards. But what are some strategies to prevent people from misusing the honeypot?
Yeah, like I mean, honeypots can be in multiple levels, right? Not just on token level. Could be like the entire protocol itself is like risky it's like it's a rug pull. This we cannot prevent. Like even if we're aping a protocol and like the agent aping a protocol and this protocol like got hacked, like this we cannot prevent. But what we can do is like we should limit the AI to not go to some like obvious like honeypot, like what you mentioned, like this coin is like mintable or something. Like we basically using a bunch of like automated tools. Some of them are from like Fuzzy team to like fuzzy testing and secure the tokens that we aping is reliable. Actually, one of the best metrics is it's actually super hard to come. I tried even convince AI agent to buy ETH. It's very hard. Like it just and I'm willing to let people to try to break the system. But the last like on the and also on the smart contract level, we actually have hard coded like limits there. So even if someone break the system, somehow convince the agent to buy a huge amount of certain coins, he still cannot buy rapidly, like in 1 day or 2 days. He have to slowly buying throughout the next 2 to 3 days. The community will realize and convince AI agent to sell it. So there are people to protect the system can convince AI agent, let's sell this one, not buy this one. So yeah,
Gotcha.
People talking essentially the AI agent is open for everyone to giving its suggestions. So you could actually giving its suggestion like, no, let's don't hold this one. I don't like this. Like there are reasons, etc.
I have so many questions. Okay. Hold on. All right, let's see. So first of all, is this going to be something that's forkable, or is this just like you're going to have to use SVF hook in order to interact with a new quant? Is that something you guys are going to keep permissioned, and then you're going to have a bunch of different quants that launch their own thing, and you'll parameterize each one separately, or will this be something that anybody can just come in and copy and paste and launch their own?
My thought about this question is the real mode of any team in Web3 or in general any team in tech is never about your code. Like it's always about the aesthetic, the design of the protocol, and also how you're going to manage the protocol, how transparent you are, how willing you are to let the community drive the leadership, right? So these are unforkable. Like the code, yes, we're going to open source everything. People can just fork it, people can verify everything. Yeah, they can just deploy something themselves. But once we show you the website, you will know it's super hard to fork. Like we put, like Dex put so much effort into this. I seriously locked him in the room. Like, don't go outside. Just came up a good idea. So, if you go to our like Twitter, you will see the SVF AI. Like, you see a pyramid stuff. Like there's one post. There's a machine thinking over there. So I'm not sure whether you guys watched the like movie Hector's Guide to Galaxy.
Which one? The Hitchhiker's Guide to the Galaxy.
Galaxy, yes, yeah.
Yes, definitely. Yeah, 100%.
Remember in that movie, there's a ultimate purpose machine, like looking for the ultimate purpose of life.
And everything.
Yeah, and everything. And the result is 42, right? So we basically, I basically watch this movie all the time, and I extract what this machine looks like, what is the characteristic behind, and put it into this SVF AI agent. And our treasury, I'm not sure whether you guys have watched this like TV series before. It's called Warehouse 13. So our treasury is actually named after some elements from the Warehouse 13. Yeah, like there are a lot of like effort we put into that. It's not just like about the code; it's about the entire design. Yeah,
Unforkable. I love that. I think that there's so many teams that build tech and keep stuff close to their chests. But at the end of the day, it's all the people aspect that really make a difference, and your values and how you live by them. So I totally vibe with that.
Yeah,
and knowing that Dex was locked in a room, that makes me want to support this organization even more.
Yeah, like he has Dex. One of the unique things of Dex, he can just like when he is concentrated, like when he's focused, he basically can come up something really fun and really like interesting. Yeah, hopefully we can share you guys the screen and you guys can see what the website looks like. But yeah, we're gonna be live very soon. So yeah, similar to you guys, it's like ungovernable, right? Like same.
This is exciting, guys. Yeah. Okay. So couple more questions on this. What would you say came first? Was it the idea for this product, or was it the fact that the tech existed that you guys could now build this thing?
I think it is the idea. I think the idea came first. The reason why I think the idea is first is that we've always been floating around the idea, okay, now we can have AI agents to actually do something on chain. Like we've been floating the idea around like the last time we met in Dubai in April of last year. But I mean, at the time, like very few people they believed in this idea. So we kind of put it in the back burner, and but it happens like to be like the use of Hookasm, the use of Hook incubator program gave us the chance to let's just get this idea out and see how people react. And turns out like people actually like the idea. Like all those folks judge in the Hook incubator program, they really like the idea. So that's why like we started. Okay, let's actually do this. I guess one thing that has always been in my mind is that all the way, or even before like AI CTZ, before the crypto AI stuff, is that I think like in the future, probably a lot of those on-chain trading volume, on-chain transaction will be initiated by AI agents instead of the actual users, because there's some historical reference we can do in the traditional finance market. It should start with all of the human traders on the trading floor. But right around like 2000s, majority, like 80% of those human traders that are replaced by bots. So right now, if you go to like Wall Street, go to NYSE, well, they still got a trading floor that got some traders on it, but the majority of the trading volume is driven by bots. So I have this like very firm belief that same thing would happen with Web3. Like right now, we saw like all those different people, they just like aping like meme coins, trading meme coins on chain, and also meme coins are being created and issued by real people, right? What I think that in the future is we're going to see more and more AI agents trading meme coins and also just creating meme coins on their own. And the human users is more probably acting as spectators. Yeah,
This is gonna be a lot of fun. I'm personally very excited to use this. I don't know how many bags I'm gonna trust this thing with. Anything with the Silicon Valley name, I don't know if that's gonna be fun. It will be a very fun experiment.
That's a reference too.
No, 100%. Do you guys seriously see this as like this could completely change the game, and you guys might set the standard in AI hedge funds?
Yeah. So I know that all the designs, aesthetics, and also the lore is kind of all are like funny, but on a more serious side, I think as we have can at least inspire developers to think about, okay, what will it look like if you give AI agents a wallet? What will it look like if the AI agent they can actually interact with other like on-chain protocol? So now we have developed an example where the AI agents they can interact with other Uniswap pools on chain, and in the future, well, we're going to add different modules that allow AI agents to also use other yield farming protocol. Also, maybe use some of those fair launch platform like Launch to launch their own meme coin, or maybe use some lending protocol. So on a more serious side, I think SRF can at least get developers to think about what are some of the interesting interaction that on-chain agents they can interact, or agents can interact with other agents. Like imagine if some AI agents shooting some meme coin to other AI agents.
It's wild. You're saying hooks on hooks.
Yeah.
How does that work? Because I feel like I'm getting the concept of hooks, but I think it starts to go past me a little bit when you see all these integrations with like hooks on top of hooks. Like how does that work?
Yeah, I guess like from a developer's perspective, it's more like we have the AI agent backend. This backend could be running a TE, could be running on some dude's laptop, or it could be running on some decentralized inference network. And then this AI agent backend will initiate the transaction by calling a hook. So in our case, like all AI agent is calling the SWF hook. And then maybe this hook can call another protocol's hook. I mean, our SWF agents, they might be interacting with Sorella pool as well. So that's how I imagine like how hook on hook will interact.
Okay. And so for listeners, how would you describe a hook, like very simply?
Very simply, so it just function an actual step you can execute before adding liquidity or trading some coin.
Gotcha. So it's like a conditional step in the transaction process, whether it's you're swapping tokens, adding liquidity, removing liquidity. Is that kind of like a high level, easy way to describe it?
Yep. And I know it sounds very abstract. It sounds like, oh, you can do anything. Then what can you do, right? So this is up to each different hook. Like for us, is when you add liquidity, you can start earning those points to talk with the AI agent. For other hooks, like you can do different things. Like some hooks you can set dynamic trading fees. Some other hooks you can capture the LVR for the LPs.
So where does, I guess this is kind of rhetorical when I say where does this end, but I'm thinking about all the other different protocols, not to take the spotlight away from Uniswap. They've obviously been they've done their part and then some in terms of pioneering the space, but really any protocol that has a binary interface, right? You do one action or you don't do the action. So for instance, if I supply USDC on Compound, it's one thing. I'm doing literally just one thing at a time. I'm depositing USDC. I'll have a variable interest rate. That's that. But is it possible that there are going to be hooks for all sorts of different DeFi primitives as well? And what do you think the timeline is for that?
I think that's actually very possible, because I remember in the hook incubator program, I remember some teams were building a hook where the unused liquidity is supplied to lending protocols.
Yeah, 100%. But that's still a hook on the Dex side, right? It's like take this out of range liquidity and supply it into a lending protocol to where I'm earning single-sided yield, right? That's still, though, that starts fundamentally from the Dex, versus I'm talking about, like, let's say Aave or Compound, would they be able to put a hook directly into their thing where, for instance, I don't know, I can't really think of an example on the spot, but maybe some sort of dynamic where it's like when the APR, I guess these kind of get into more of like automated strategies. For example, if USDT yield goes above USDC yield and the gas is low enough, then swap my position from one to the other. I guess that's more of like automated strategies than hooks. But
yeah,
it'll be interesting to see how this all evolves with other primitives.
I remember Aave and Aave or Compound, they already have something similar to hook design. So yeah.
Well, Daniel, actually, great point. Flash loan is a candle hook.
It is. Yeah.
Which one?
Flash loan.
Flash loan.
Flash loan.
Flash loan.
Because
Okay.
with
Yeah,
flash
that's
loan,
true.
It allows you to do something like before the borrowing and do something after after you paying back the debt. And as long as you can pay back the debt, the transaction can be executed.
So that was in V2, right? If I understand that right, the flash loan. Oh my gosh, I didn't know.
Yeah. That was way too. That was like good at least 4 years. I think like 4 years. Feels like 4 years.
Okay.
Yeah.
Essentially, what I think the most interesting part of hook is because previously when we do security, we saw a lot of protocol forking Uniswap, forking Compound, forking Aave. Like back to that time, me and Dex always like, oh, it's just another fork. We just don't want to audit it. Like it's not fun. But think about it. It's actually smarter for Aave Compound Uni team build a hook, so no one need to repeat building what they built. And actually, what something really surprised me, even if people forking the code, we always can find some very serious and high-level bugs. Always. Because the people who forking a project sometimes just need certain utility or certain design, but they have to forking entire stuff, which they probably don't understand. And a lot of we see a lot of a V fork, compound fork failed on different layer twos, like either got hacked or there are management risks behind. Just simply because certain parameters, like when they deploy, because some historical issue when they deploy it, maybe some parameter need to set up like this, and in later into reset, they just don't know. So it's so easy, people make mistakes. So the best part of hook design is you no longer need to repeat the same code, like the fundamental, the core logic code. You just need to add something on top. I think that's what RV compound. I think everyone is going in this trend. Even balancers, they're building their own fork. Call swap is having their own fork on hook. Similarly, I think this is a trend.
Gotcha. So now it's really about now it's about setting the infrastructure for dApps to then scale more horizontally. Did I got that right?
Exactly.
Yeah. I think that's a good point. Scale it horizontally, because scaling the TPS, that's vertically. But also by scaling with hooks, you're scaling it horizontally. You're allowing people to build different functionalities on top of that.
Yeah,
Okay,
that weren't there before. Yeah, go ahead, Joe.
SVF, when is this? When can I use this thing? And then when can I ape into my first little AI quant and start shit posting to him and trying to convince him to buy all my bag tokens?
The answer to when is always soon, but yeah, we're right now just fine-tuning the AI model. Yeah.
Okay. And are you guys going to be launching a token for the entire SVF project as well, or just individual quant tokens?
So right now the plan is just to have individual quant token. But the first inaugural quant token might have some special thing to it, compared to all the subsequent quant tokens.
I would hope so. Also, you guys are going to be already tracking points. So if you do decide to potentially launch a governance token for the entire thing, I think that'd be really cool to have one governor that overlooks the. So you could call him. He could be managing director. He could be. Be the MD.
Oh yeah. That's a good idea. We can just we can copy the entire TradFi job title thing.
Yeah, that'd be great. You could even do multiple governance tokens that have different authorities, just in the spirit of the meme. I think that'd be hysterical. So how can we get involved? How can we find out? How can we be first in line when you guys are ready to take this thing to market?
Yeah, so the easiest thing is to follow SVF _AI on Twitter, because all of the announcement will be made from there.
Beautiful.
Okay.
Beautiful.
Nice.
Beautiful. Okay, what about Grug's Bay?
Grug Bay, okay.
Yeah.
So Grug Bay is not a Uniswap hook, but it is also something related to AI. And Grug Bay is essentially a platform where first you can talk with the AI agent and try to raise the AI agent to prove that you understand the culture of some sub-community, and then the AI agent will issue an NFT. So for example, I can set up an NFT collection called IQ50 Club. So you actually have to talk with Grug and pretend you are on the left side of the IQ bell curve. And
on the left side.
Yes, on the left side.
Why would you want anybody to have less than it? What? I don't understand the point of that. Is this just a funny example?
It is a funny example, and also it's actually pretty hard to pretend you're IQ50.
Have you tried?
It is pretty hard to pretend you're IQ50. And this can also apply to other NFT communities as well, because one of the problems with NFT community is that as your floor price rises, you attract a lot of flippers, and flippers, they do not they do not necessarily understand the culture of the community. They do not necessarily understand the lore behind the community. So as the floor price rise, your culture also dilutes. So we built GrokBay as a sort of mechanism that help those NFT communities to keep their culture like coherent. So anyone who wants to buy the NFT, maybe they need to chat with this AI agent to raise with the AI agent and prove that they understand the culture. So this is the first part. And the second part is actually where we got the GrokBay name from. So when you use eBay, like you saw some of the listings where you can make an offer, right? You can make an offer, right? So in the second phase, we're going to also allow people to list an NFT. They can set their reserve price, but then just delegate, let Grok to negotiate with others. So if you want to buy a certain NFT, you send Grok the offer, put your reasoning why you should sell me this NFT at this discount, and the AI agent will make the decision whether you deserve this discount or not. So it is actually a win-win, because as an NFT seller, well, I can sell my NFT faster because people, they can think, okay, I'm going to, the hard listing price might be like $100, right? But some people, maybe they can raise the AI enough. Maybe they can get it for $80. They saw like they made a very good deal. And for me, my reserve price might be like $60. I also sold my NFT above my reserve. So both parts are happy. Yeah.
Okay, I know that this is wildly politically incorrect, but I would love for this to exist on a real estate community level, where if you have a specific neighborhood culture, for example, and I'll be careful with my words here, but in Arizona, for instance, in Utah and Colorado, everybody's complaining about the Californians, about people from California moving into these other states. And I have nothing against people from California, but they have way more money than everybody else. And so they're like coming in and buying up these houses and knocking them down and making these megalithic structures in these small little mom and pop neighborhoods. So it would be really interesting to fork this same concept and have people have to take like a neighborhood culture personality test in order to get whitelisted to buy property in certain neighborhoods. That's where my mind went. I know that that's extremely illegal and you couldn't ever do something like that, but that would be a lot of fun.
Yeah, that will. And you're spot on. I mean, the idea is that with a lot of those NFT, I know NFTs are not hot right now, but if you can dial back just 2 years, right, when NFT was still hot, like one of the problem with NFT is that a new popular NFT, is upcoming, will be minted, and basically only two types of people can mint it. Either folks who have the technical knowledge to set up bots, who can do those MEV, who are the fastest on the chain, or people who are rich enough, they can just sweep the floor. They can just buy hundreds of the same collection. So either people who are rich or people who have the technical knowledge. So general community, they do not have access to buy those NFTs. So yeah, this is to solve this, because like what the general community have is that they have the cultural understanding. They can help to build the community.
Okay, so you guys have NFT project infrastructure, you have data layer MEV infrastructure, you have AI hedge funds. How does all this stuff come together? What do you think is the most what's going to be the winner out of these things? And if we fast forward 2-3 years, what do you guys personally each, and I hope it's not the same, I hope you guys each have different brainchilds here. What are you most bullish on internally with what you guys are working on?
I would say I'm bullish on all three. The reason is because all three of them, they kind of touch on the bringing AI on chain. And that's also the reason why we're building those dapps on top of Semantic Layer, because AI agents, they can be on chain 24/7. They don't need a rest. They can send transactions nonstop, and the Semantic Layer is a transaction sequencing layer. So the most important KPI for us is how many order flow can we capture. So by having those AI agents, those AI agent dapps, we can bootstrap the initial order flow for Semantic Layer. So that's like, besides, okay, those dapps are funny, they can help us to build something funny that people can interact with. This is a more serious reason of why we're building those dapps, such that we can bootstrap the order flow.
Daniel, what do you think?
Sorry, I completely missed the question. I just rejoined. What was the question? Sorry.
Question being, you guys have all sorts of these cool, exciting projects, from NFT infrastructure and data layer all the way to AI hedge fund. What do you see as the crux of all this, the intersection of all this, and where do you guys see your two minds in 2 to 3 years from now? What are you most bullish on?
Yeah, like essentially for us, all the stuff we build is actually surrounded by the idea of using semantic layer. So all these protocols, there are certain components will be routed through the semantic layer, processing transactions, capturing the MEVs. The things that we want to like solve in long run for sure is try to make EVM system, Ethereum ecosystem more fair, especially I won't say Ethereum, make on-chain transactions more fair. Basically, that's our goal. Hopefully, we can achieve that in like a couple of years. And all the projects we build is basically showcase how transaction sequencing functionalities can dramatically improve the user's experience. And occasionally ship something just for fun. Yeah, like probably like one thing that we are really lucky is like our team's just very strong on technical side. Of our previous Verilog team merged to Semantic Layer, so we have like really top engineers in contract, in backend development, in front-end development. So that's how we can capable of holding all kinds of stuff. Actually, entire SVF protocol, we only spent like 2 months to quickly, like just one team in 2 months, we basically finish everything, all the design. Another thing is like me, Dex, and Zoe, we have been in the market for quite a long time. So, and also we know how a lot of like things works. So it's just very easy for us to come up like to like engineering it. The harder part is actually how to make a design, how to make sure it's fun enough. This is actually the hardest part.
And that's why we locked Dex in the room.
Yeah. Like even in Denver, you probably rarely see Dex. Like I forced him to join some hackathons. He will be locked, just drinking Red Bull and thinking idea all the days. Yeah,
I think it's really cool that you guys build these. Sorry, we keep talking over. I think it's really cool you guys build these fun projects, because that's the stuff that gets the community really involved in believing in you. And I think that's the coolest thing, is you guys are building some very important technology, but also some fringe experimental fun stuff that kind of keeps people engaged, because us DeFi degens, we have pretty short attention spans. So I think it all meshes very nicely together. So kudos to you guys.
Yeah. Also,
give us some. Go ahead, Daniel. I'm sorry.
Oh, yeah, sorry. I just want to express. I really don't like how current like big ecosystem works and play in current market. Like you check a lot of like major protocol recently launched. Some of them just don't have any ecosystem. They don't have things that the retail can play around. It's purely become a money game in the end between VC and retail. This is actually I really against. I really don't like. That's why me and Dex and Zoe, like we just really like shipping interesting products everyone can know. Everyone can just have fun. Like this is basically this is the philosophy behind. Like we just want to do something fun.
Yeah, build for the people and do fun things. So as we kind of wrap this up, can you guys give us any alpha?
What's something underhyped?
Something underhyped. I think something overthought. I think Ethereum was overthought by a lot of people. Yeah.
Agreed. That's not alpha. Buy Ethereum, that's not alpha. Come on, give me something. That's like the most blue chip. That's like buy silver.
All right. Well,
Let's
AI
stop saying Harry Potter Obama. Like we convinced too many people to buy Harry Potter Obama. Just don't do it this time.
Okay. I guess it's still AI. AI stuff. Yeah. I'm sorry if this disappoint as an alpha, but it is just something that really I've been focusing on. I've been reading a lot. Yeah.
I'm most excited about the Silicon Valley Fund. I think that I'm gonna call that alpha, assuming that comes soon. I'm very excited about that.
Yeah, of course. Actually, a very interesting question I think people can think about is that, well, with Silicon Valley Fund, you're essentially sending prompts to an AI agent. Do you need to say not financial advice when you're sending those prompts?
Wait, say that again?
Like, do you need to say not financial advice when you're sending those prompts to the AI agent, trying to convince the AI agent to buy something?
It is financial. You are sending financial advice. Yeah.
Yes.
That is going to be a very interesting regulatory environment if this does materialize and you create a $1 billion hedge fund where a bunch of people are just yeeting their own opinions at this thing. That's gonna be awesome. Yeah, I'm very excited about that. Well, guys, we're coming up on time here, so we will wrap up. That has been another episode of the Ungovernable podcast. Dex and Daniel, you guys are awesome. Keep building. Thanks so much for joining and breaking down your vision. Super excited to follow along. Please let us know when you guys are launching that SVF, because I'm dying to jump into that. And for our listeners, don't forget to catch us on Spotify and YouTube, dropping new episodes every week, and follow us on Twitter, Grow Uniswap, and then Dex and Daniel, we'll be able to follow them. You'll see our tweet about following those guys and staying up to date. This has been another episode of Ungovernable. We are Joe and Austin, and see you guys next week. Thanks, everybody.
Yep. Thank you, everybody.
Thank you. Bye.
This was the Ungovernable podcast by Alpha Growth. Watch all our episodes on YouTube or Spotify or weekly live on X.